Bretton right there. Okay, guys, a very big welcome to the new ones, new attendees of my webinar. Today is the 31st of March, 2021. So days and weeks are passing by really fast. And you are at the Bretton's Financial Trading Academy Wednesday's preview. So Wednesday's midweek view or preview would actually be something that I would like to get more involved into your trading for the week. You know, how much have you been trading, especially troubleshooting side of it as well, because most of the traders would actually be have actually started trading as of Monday. Myself, for example, I don't really trade on Mondays, but it all depends on the market. So if the market gives, you know, why not we take it, right? So this is basically it. With Wednesdays ones, I would love to hear from you guys. More questions would actually be much appreciated on your live trading, especially on what are the troubles, stresses that you have had since Monday of trading as well. Would love to hear you guys, you know, your views and your feedback on that. Your personal trading. So that is one of the main sort of subject that we'll get into on Wednesday's webinar with Bretton. Okay, so apart from that, we will also look through some of the trading that have actually been passed on to traders as well, meaning trade ideas and signals. I don't really share trade ideas because trade ideas are actually quite different from trade signals. So I just want to, you know, give you guys a little bit on that side of it, because you know, in the market nowadays you hear a lot of people having signals, and then you've got Telegram groups giving you entries, exits. Now these are mainly trade ideas, because you know why? There is simply no evidence that they have actually executed the trades, and there are no records or proof of how they have executed it, whether it's on profit, stop losses, what are the strategies that are actually applied onto it. Also, it might actually be a little bit of a mismatch if they are just giving you out all these trade ideas and then not educate you in terms of the percentage or the performance level of each signals that's been released as well. So imagine you've got a big basket of apples, and then people are just dumping all kind of apples, whether they are bad, they're fresh, they're not very fresh, and they put it all into one basket. And what happens at the end of the day is that the quality and value of all the apples that were actually really good start to actually reduce its value in terms of, you know, even if in the signal side of it, it'll start to damage your performance ratio as well. So trade ideas are quite different from trade signals. What I give out to you guys, members of Bretton Academy here, is trade signals and my mentorship to you. So I give you the fish, I also teach you how to fish. As simple as that. I want to keep things really, really simple. Okay, so there's been a lot of very, very hot questions about gold. So I just want to go into gold first, mainly because we have, you know, lots of traders in Thailand at the moment. I mean, the majority of the market of traders in Thailand are trading gold. You know, they are very gold driven, more gold driven than the Indians in India or some other Asians in Asia. So this is the most gold driven country in the world at the moment when it comes to trading, investing in gold. So for the Thailand traders out there, we've got a community of about 2,500 traders, my followers there in Thailand, and most of them are based in north and northeast of Thailand. We've got a big group there. So they have been asking me, they're not in the group today, but we've got a separate session later on as well, and I'll share the recordings of that session to you guys as well, because we're going to do a proper analysis on gold. Let me just put some people in here. Okay, so I hope you guys can hear me loud and clear, right? Everything's okay. Kunan, everything is good, right? To go. I think with my screen share and everything, just want to make sure everything is spot on before we start. So, okay, let me just take you through first before we do a little bit of a intermarket analysis, trend analysis, market analysis in general. I just want to get straight into gold first because we've got loads of pending trades and people are not really sure where is the market going and things like that. But I just want to share with you guys on the technical aspects of things and then marry that up with what's going on in the market in terms of fundamentals and decisions by the big boys and things like that. So see whether we could actually marry that up to give you a little bit of an idea. Now, you guys have actually noticed that market's been falling in terms of gold. That's mainly contributed by USD strength. I mean, we have had all this story about yields, returns in yields, long-term and short-term yields, treasuries, and all that kind of stuff. Now that sort of news have actually wore down a little bit, but then now it's Biden's stage. So it's Biden's stage, and he's going to give a speech today as well. And we need to watch out for that news because he will be talking about the 2.25 trillion infrastructure spending, which is really big. So, he's new in the presidency, and he's at the stage where he has to impress. His address to impress, also to investors and global partners as well. So he's got to present really well. And so far, it has actually, the sentiments itself have been very positive. So that's been driving the market upwards for the US dollar. Now, what we see here, for example, I just want to share with you guys on gold. And it's really interesting because I have spotted a very interesting pattern here. This is called an inverse cup handle pattern. Now, the inverse cup and handle pattern, let me just admit. Okay, I think we're okay now. Okay, so Alfred, I think you're in already. You're having issues with getting into the webinar room. If you do, just message me on Telegram as well. If you're already in and everything's okay, then that's good. Okay, so we've got a bit of a cup and handle, inverse cup and handle pattern. Now we will cover the specific strategies on cup and handle because we've got various stocks that have got this inverse cup and handle. And it's really interesting because we have got a list of stocks, 100 US stocks, and we've got about 8 to 10 that are correlated in their movements, and it's really interesting. And the top 100 stocks in the US are actually owned by the Swiss bank. Okay, the shares, majority of shares, I think about 40+% of all the 100 top stocks of the US is actually owned by the Swiss National Bank. And when I see that correlation, I also see the correlation with not only US stocks in general, but also the Swiss franc itself. So yeah, we'll talk about that in a separate occasion, separate tutorial on that, because we've got specific strategies on there. Now let's talk a little bit about gold straight away. Now it's trading at 1681, okay, area. At the moment, I mean 1680s, let's say it's 1680s. Now we've got this inverse cup and handles. I just want to talk about the inverse cup and handle very quickly, but we will talk about the strategies and everything else in a separate video. Now, what is expected to happen is a reversal at this moment of time. Okay, it's a reversal. So let me just okay. Right. So let's say we have got an inverse cup and handle. Let me just want to draw that for you guys there. Okay. Now you have got an inverse cup and handle. You've got a cup. An inverse cup is an upside down cup, right? So now gold's position is actually reached the mouth of the cup area. So what it could actually potentially do is to go up. So now the expected move is for it to actually go up. Now, how far would it actually be going up to is at least 50% of the base, from the base to from the mouth of the cup, because it's upside down cup, right? To the base of the cup, it's about 50% Fibonacci ratio. So what you do is that you pull your Fibonacci retracement from here, okay, the base there, right to the very top here. All right, and I'll show you exactly how I do that, and you guys can actually learn from there. And when you pull your Fibonacci ratio, you pull it from point A to point B, basically the mouth to the base, right? And then you look at where the 50% is. Now that is the 50% that the price of gold could potentially go up to and then reverse. What it does is that when it reverses, it will reverse back to the mouth again, right? Then it could potentially break out there. Usually it returns a little bit back to that point where it has actually broken, and then boom, down all the way. So what does that mean? That actually means we've got a small cup and handle signaling to us a potential overall breakdown of price to go even lower. But at the moment, what could potentially happen with gold and the traders out there is gold prices would actually trick traders into believing that, oh, it's a reversal. It's not a total reversal. It's not a total reversal of trend. It's just a reversal going on. So a small reversal by up to about 50%, and then boom, come down, and then it'll break out to break down even lower in terms of price of gold. So now we apply this simple theory into the live markets, onto the chart. And as you can see, prices itself right here, you could see that price itself has actually begun to rest. Okay, it began to rest. And when I say begun to rest, began to slow down, no total exhaustion of price yet, but then it's beginning. The sellers are beginning to exhaust. Oh, give me a second. Okay. More people in the room. That's great. Okay, guys. So we have got the rest of buys. Buys are actually resting at the moment. And as you can see, we've got all the wicks and all that. And we can see that perhaps there's some, what do you call that? Different pattern types, candlestick patterns here, for example, and that is just giving me the indication. I've already bought the gold, right? For example, I've already prepared myself just as of earlier this morning, about an hour, 2 hours ago. I have actually prepared myself to actually enter the trade for the buy. I know I've entered a little earlier, and I just thought I'll just do that first, because you see, right here. Right, so you've got a big fall here, and then you've got an inverse cup and handle pattern. Now, if you guys want to learn a little bit more about cup and handle pattern, I'll do a specialized video tutorial for that. But then if you want to read a little bit more, just type cup and handle pattern on Google and you'll find loads of it. But the thing about these kind of patterns is that when you type all these kinds of patterns, it's limited information about proper exit and all that, and using other tools to make your trade really sharp. The reason for that is because all these pattern type articles have been actually used more as a marketing contribution, content marketing. Okay, content marketing strategy. So there's just loads, and there's a lot of repetition. So there's almost not much. There's almost non-existence of latest cup and handle pattern together with the strategies that actually really works. Okay, so hence the reason I think it's best to demonstrate that when we find a pattern like this, we just talk about it, discuss about it. I share what I know about it, and then we trade it as best as we can. But we need other tools to actually be added onto this strategy. It's not a standalone strategy. Any patterns, whether it's harmonic patterns, you guys like harmonics pattern, sharp patterns. I know I've got my geometric pattern, but I always tell every traders there's even with my own pattern, it's not a standalone pattern. Okay, it's not a standalone strategy. You need to add it up with your trend analysis, market analysis. You need calculations to understand. You need to make certain calculations to understand your lot sizing, your risk appetite as well. So all that has to merge together into a trade plan. Okay, so this is the most important thing. So now let's get back to gold again. So hence the reason I've mentioned earlier on in my drawing that you can actually pull your Fibonacci from the base right here, right from the low and all the way up right there. And then you have got your 50% and you just mark your 50% right there. Okay, now that 50% is your TP, your potential TP area for the buy order of gold. Okay, so that is sort of 1715 or 1713 area. I would think maybe, you know, dollars below. And that is basically what I want to share with you guys today on gold. Okay, so I'm expecting a bit of a reversal and then to go to the 1715 area. Okay, 1715 area, and then come back down again and all the way downwards once it's actually broken down. So this is a continuation, trend continuation pattern. Why? Because the previous trend right there is a downtrend. So then you've got an inverse cup and handle pattern for gold, and then boom, it has got more room to downside. Now let me just show you the overall picture right here. Now, this is a wonderful thing because we have got an inverse cup and handle pattern right there. I've got several geometric patterns as well as other harmonic patterns. They're all merged, amalgamated together to produce a nice, clear picture, bird's eye view for you guys. So I've started trading gold for quite some time. And a couple of months ago, I've begun my sell, and that's mainly because of all these potential movements to the downside. So here, for example, I've drawn this perhaps about maybe 7, 8 months ago, and we have seen that reversal right there has actually created my C point for the geometric pattern. So here, for example, following this huge pattern to the downside for gold, I have already predicted, sort of forecasted the fall to be at the 1646 area. But of course, you know, we want to exit just before that as well. But now, as we look into this ABCD pattern, geometric ABCD pattern, we find that we've got additional beautiful patterns within this very big pattern. Okay, so inside the big pattern like this on a big time frame, usually you could trade on mini baby patterns within it. So that is how we ride along the trend, and we basically are trend traders, and strategies that I share are mostly trending strategies, okay, or trend trading strategies. So here, for example, we can see that it has pointed us to this area at 1646. You can also draw a vertical line just at the end right there to give you a little bit of a hint of when or by when could that fall be expected to. And that's April midweek, I would say the second, almost third week of April 20th. So then we can actually look at the time factor as well. I know a lot of traders, they don't look into the time factor, but with a pattern that is drawn like this geometrically, you are able to use time and space to give you a bit of a prediction or forecast in terms of by when you would expect that fall or that rise. Okay, so here, for example, now at this fall at 1646, when we look to the left, it's exactly like you crossing a very busy highway. You need to look to the right and to the left. Now, in the highway of currency trading, for example, you want to actually look to the right for the current price, of course, and also to the left in looking at whether or not has there been any push of price to the upside. Now, you've got reversals at that moment of time as well. Is really crucial for you to understand what has actually happened before could actually happen again. But these are very relevant, significant support and resistance. So here, for example, if I am predicting a fall of gold's prices based on this pattern right here, in terms of you've got your inverse cup and handle pattern. Also, you've got this ABCD, huge ABCD bearish geometric pattern as well. They're all giving you a trade signal of shorting gold versus the dollar. Now you've got it expected to actually fall right here. That inverse candle as well is actually giving us a bit of an indication that this is a possible move. Now, when it actually comes down to this area, we need to watch out for reversals as well. So don't get too excited while you're already raking it, profiting from the fall, for example. Try not getting too tempted with letting your trade go and thinking or guessing that it might fall even more. But of course, it might do and might not, but it all depends on what the market wants to do. So if the market needs to reverse at that moment of time, then it would reverse. But then we only get little hints whether it would or not. So it's never a certainty, it's always a probability. Okay, so then there is a hint right here that it would reverse, mainly because of that movement of bulls at some point of time. Let me just check when that is, because this is the most obvious to the eye, to the naked eye at this moment of time, is this movement here in terms of a bullish previous move, and that was back in last year in April. Okay, so last year in April, and then we've got this year in April as well. So you see, it's really interesting. I put the vertical line right there, predicting the fall to actually sort of zigzag, go back down and reach that point somewhere between, second to third week of April, close to the 20th of April for price to reach at that moment of time. So that would give you time sensitivity as well factor for you guys, because you guys would actually be trader, whether trading it short term, intraday, mid-term, long term. So you guys have got an idea right now, especially when we are looking at the market based on a daily chart at this moment of time. So then you've got that vertical right there. I like drawing huge patterns on the monthly chart, weekly, as well as the daily chart, because of the data, because of the amount of data that's in there in terms of price action as well, and using candlestick charts. It's sort of been really good for us traders in trading that way. So when you want to trade following your style, you can then take that across other time frames, shorter time frames, and look at whether or not you could find similar pattern but smaller patterns. Okay, so you can trade smaller patterns within this big move right here. So in a geometric ABCD pattern, we're not trading from A to B, B to C, and all the legs that you can actually see. We're only trading from C to D. But then in terms of our entry point, or where I have personally entered, together with what I have suggested to most of the other traders, is to actually start trading on the sell at the centroid point. That's the center point right there. Now, this is a very interesting what you call that concept behind trading using geometric patterns, mainly because once you've actually put a line onto the center point right here, you could always see that that center point line would automatically be very significant support or resistance. As you can see, it's automatic. Okay, and that has actually been happening 90% of the time whenever we have drawn a solid enough geometric pattern. Now, that solidity of the geometric pattern does depend on the Fibonacci ratio. So when I pull A to B, I need to look at the C point. As you can see, the C point touches exactly on the dot of the 61.8%. Now, the 61.8% has got its history, with all the ancient buildings being built as well in architecture. It uses that ratio, 61.8%. In surgery as well, you've got the doctors and surgeons. They are actually, fixing issues with patients and doing their surgery based on the 61.8 ratios, 0.618, and all that kind of thing. And our whole body is actually broken up following these ratios as well. So if the C point touches on the dot, especially like in this case, of the 61.8% or even the 78%, 78.6%, then you have got a higher probability of prices or higher probability of that pattern being a solid pattern. Okay, and usually what happens if it is 61.8 right here, then this is another trade idea, another trade signal for you guys. Okay, is when you pull your Fibonacci, if the C point is at 61.8%, then you can actually imagine that the price could potentially fall to 1.618%. If the C point is 61.8%, you can pull a Fibonacci based on the extension and look at the target to be at 1.61.8%. Now, as you can see, when I draw that whole pattern and predicted that D point to fall or your TP to fall there, when I pull the Fibonacci at 1.618 retracement ratio, it just overlaps and goes straight on, bang on to the same area that I have predicted before. So what does that mean? That actually means that we've got a high probability pattern right here on a big giant geometric ABCD pattern to predict the fall of gold versus the US dollar to the 1646 area. And with that, we've got all these little ingredients, little baby patterns as well inside this big pattern, and that is your inverse cup and handle pattern. So there you go. This is basically for you guys who are just wondering what is happening to gold. What do I do with gold right now? Is it going up? Is it going down? This is purely on the perspective of technicals and using patterns and also price action at this moment of time. And as you can see, I don't actually use any indicators for entries and exits. I use my entries and exits are strictly based on these kind of patterns that I draw. But then if you see all these lines in terms of indicators that I use, they are only to indicate to you the trend. Okay, so I use them as trend, and the most I use are your moving averages. I use the ADX as well very differently. RSI, I use it very differently as well to draw trend lines and stuff like that. So I've never used any crosses of moving averages and all that for the past 10 years already. Never used all these crosses to indicate your entry, crosses to indicate your exits, all that kind of things. No, I've not used that. And also overbought, oversold. There's just no such thing in the market for me personally as a trader. So there you go, guys. So this is your sort of trade signal. The reason why I say trade signal and not trade idea is because I am literally trading it, as you can see, on a live account, and I'm actually trading what I am sharing at this moment of time, and I'm analyzing and sharing it as what I do for myself. So there you go. So this is for gold. Okay, I hope that makes sense for you guys, especially for gold, because there's a lot of wanderers out there with trading gold at the moment and just wondering what could happen. Now, this is what could happen on the shortest term for gold. Watch out. So you've got a good, what do you call that? A good chance to actually sell, to actually buy gold right there. So as of now, because we are expecting that reversal first, okay, so that reversal, and then the end picture is for it to actually reach to this level down here. But it's a mini inverse cup handle going on at this moment of time. Okay, is that clear? Any questions, guys? Gold traders out there, any questions? Let me just make sure that okay. Okay, I just have muted there because got the voices there. All right, any questions, guys, on gold specifically? If not, let's get back. Let me just introduce the Facebook page, Bretton Financial Trading, BFTA, as well as the video channel right there where I post all the recordings in there as well. Okay, so for you guys to view the recordings, it's best if you register. Only for registered, those who have registered in, for the webinar, you can actually replay that. So we'll have that onto the Bretton.institute website as well very soon. So we've got I've done some readings as well, and got some important things to share with you guys. I'm also using this heat map, as you guys know, for many years already. It's from Forex Early Warning. This company in particular is from the States, it's from the US, and it has been existing for about 15 years. And they have only sold this, I mean, their subscription is per month and it's only $20, and they have stayed at $20 for about 15 years. And it's used by the top traders as well as hedge fund companies uses it as much as individual retail traders as well. So I find it to be really useful for me in order to scout the market, like a heat map, just to get a bit of an idea of between the Asian sessions, as you can see here, and the European sessions, what are the pairs to concentrate on, focus on, so that you get a better idea of what you need to pick for the day to trade. So this is really important for us to actually ride along the trend that has been created and focused on by the big boys. So we shouldn't actually be picking the pairs based on what we like trade Euro USD every single day, for example. We would be missing out opportunities if we do so. So it's probably best for us to look at what the big boys are trading, focusing on, because they are at the end of the day creating the trend anyway, right? So we are participants of the market as retail traders. Now, we are not also, it is not that obvious of where we stand or where we exist in the market as retail traders, because we're really, really small. So with all the volume and trading opportunities that are going on can actually be reflected by these bars right here. The green bars are very simple. It's for the bulls, and then the red bars are for the sellers or the bears. Now here, for example, what I usually look at is participation by traders with all these bigger bars, longer bars, okay, whether they're green or red. Like here, for example, they're quite uneven right here between the Asian and the European session. But then we've got quite a huge participation and very steady, very long bars on the JPY crosses. So then we know that, okay, we've got participation by traders onto JPY crosses, and then we have got sort of an arrow here indicating the AUD JPY to be quite strong in terms of its steady participation of traders and investors, but also its strength seems to be quite solid. So you've got a lot of buying of AUD against the JPY. Why? We don't know that, right? We don't know exactly why we have got interest for particular pairs or particular group there. But then this is probably the best way to actually participate in the market, following what the others or the other bigger traders and investors are actually doing. And then we can actually do lots of confirmation and cross-check that with ourselves, our strategy onto the charts and various other things. So here, for example, I'm also interested in knowing more about JPY crosses. So I'll take you across to the Action Forex. Action Forex is just a page with lots of information in there, and I like using their tools, also their heat map as well, because as a trader you want to always be prepared for anything, right? So what if I like this website, of course. I've been subscribed to it for quite a number of years. But then what if it calms down? What if the company just go bust for some reason? And what if the whole feeds here don't work anymore? And then you go onto it. Do you actually panic for the day? So you shouldn't actually be panicking for the day. So hence the reason you need to have some standby tools, not get over dependent on one kind of strategy, one kind of tools, and then when it starts to disappear or don't actually perform as you want, and then you start panicking, and then you look for other tools that can actually substitute that. So we don't want to be in that situation, especially on a trading day. You can actually panic all you want on Saturday, Sunday, but then on Mondays to Friday, you need to be really focused, practicing your patience and be disciplined onto your trade plan. Your trade plan has to have loads of elements in it. Okay, so we'll talk a little bit more about trade plan, especially the price PRICE trade plan that I have been trading with for quite a number of years, I think almost 10 years now, and shared that with all my traders in the community. So there you go. So this is your indication there, but we go back to the currency heat map. Currency heat map from Action Forex is quite interesting. I wouldn't say that, oh, you know, it's really accurate and it's the one that you want to use forever. No, I wouldn't say that. It's just that you need to be careful in understanding that these kind of tools are also part of the content marketing strategy of loads of websites. Okay, so they want to have the heat maps because they know traders, psychology of traders itself, they get very fascinated with colorful things, just shiny things. So they get very tempted to believe that, oh, this is the best and this is what I'm going to use. And then whether it works or not, because it worked before for me, so I'm going to use it forever. That kind of thing does not actually work for traders for the long term in terms of the right mindset or the right frame of mind to be in, okay, when you're using tools as such. Now here, in the Action Forex, we just want to look at columns that has got dark blue or dark red. So like here, for example, we've got all these currencies are said to be very bullish against JPY. So again, it coincides with what we have seen here, right? So we've got all the other currencies are actually being really bullish at the moment against JPY. I think I've got a question popped up. Okay. Yes, Mr. Kuna, no problems. We'll definitely take a look at JPY crosses and AUD JPY. Definitely will. Let's take a look at that one. No problem. Give me a second. Let's just go through the heat map right here. And I just want that confirmation for you guys to know that you guys would most probably be at the right side of the market, especially with JPY crosses. You know now that JPY is really weak, but then do we straight on go onto the platform and click onto the buy and sell accordingly to what we see? No, we've got to do a little bit of a trend analysis and technical analysis as well to confirm, and then we make that financial decision to actually trade or not to trade, to hold when we get to that point. Okay, so not at this stage. This stage is more on a market analysis, trend analysis, using the heat map and various other things. Okay, so let's look at the pair that Mr. Kunanap actually mentioned as well, AUD JPY. Let's go on to AUD. Now, when you go on to AUD, you go to AUD JPY, it indicates here that it's bullish overall, but on the 4-hour chart, it seems to be a little bearish. Okay, it's not dark red, it's red. But again, this is a lagging kind of tool as well. It's not 100%. But what is best is for us now to take a look at AUD JPY straight on and look at whether or not we have got any trade ideas coming up. Second. AUD JPY. There we go. All right. Let's clear out all the noise in the market. Very simply, what we can actually do is just to do another trend analysis based on the chart. Now, how do you do that? Very simple. You start off with the 1-hour chart, you compare it with a 4-hour and a daily. Let's just keep it really simple, 1 hour, 4 hour and daily. But what do we look at? What we look at is whether or not the candles, we look at two things. We look at the movement of candles as well as the 3 lines that I've put on. Now, I've used this 3 EMAs, not simple moving average, but exponential moving average. The exponential moving averages are the 50, the 100, and the 200. I've been using this for years, and just to indicate your trend, okay? And I also apply the exponential moving average as well, which is really another additional line, but again, it's just for trend purposes, not for crosses or anything like that, because now what we're doing is simply a trend analysis. Let's start off with the 1 hour chart. Let's look at the current price at the moment. We've got 84.19, right? So we want to cross the highway of currency trading by looking to the right, looking to the left. Now, we can see straight away at a glance that it is biased to the upside. We've got a lot of higher highs, we've got a lot of higher lows, and also we've got current candles, and majority of the most recent movements of candlesticks are above all the 3 lines. So that actually tells us it's biased to the upside. But this is only on the 1 hour time frame. We cannot make any decision just based on that and saying that, oh, it's an uptrend, go and click onto the buy. No, it doesn't work like that if you want to be a trader. If you want to be a trader investor, you cannot do that. If you want to be a trader gambler, go ahead, you can actually do that. So now the price to the right is at 84.17. Now, when I look to the left of the current price towards the left, and if I do it like this, I can see that the current price is actually really close to the resistance zone. We've got another resistance zone up here. Okay, we want to draw your line, 2 lines. Now, I've seen this a lot on in traders where they actually draw just a single line, a single resistance, or a single support line. It's probably best to draw 2 lines, one on the body and one on the wick itself. Okay, so then you capture the sensitivity of the price action itself. So here, for example, if you want to draw one based on that recent movement there, the peak, you can actually draw 2 lines again. One is on the highest body that you can see, and then the highest wick's already drawn. So then you've got all these 3 lines giving you that indication of a potential resistance zone. So then you want to always have a resistance or support zone, not line, not a single line. Okay, so now I can highlight this area right here to tell you that on the 1 hour chart, we've got a resistance zone. We've got prices sort of retract, and there may be a bit of a reversal going on. Let's compare your 1 hour chart to the 4 hour chart in terms of trend. Now, in terms of trend, you can see that it is still biased to the upside, but now it may be a little clearer for you in telling you that, hey, you've got that resistance area right there, and you've got this area here resistant there, and then you've got a lot of power of the sellers actually. So now the price, you see the price here at 84.15. If you look to the left, to the left, to the left, and you find the clue from a single bearish candle, the power of the bearish candle, and you've got one powerful bearish candle, the mother candle or the body of the candle is quite long and powerful, and we want to refer to that and look at that whole body itself is a 60 pips body. A 60 pips body is quite powerful. Okay, anything above 20-30 pips it's quite powerful. So what that means is that the current price or the current sellers may want to actually participate in the previous selling zone. This is the previous selling zone right here. So then you want to look at that area right here. So at this moment of time with Aud Jpy, yes, market is telling you, heat map is telling you, a lot of buying opportunities because it's bullish and stuff like that. But what you want to know is, for you now as a trader, what do you do at this stage of your trading? Trend overall is great. It's on the upside. But at this moment of time, Aud Jpy looks to me like it may reverse, and it is actually reversing at this moment of time. So we have got a chance for a sell for those of you who wants to participate in a little bit of selling of the Aud Jpy while waiting for it to correct and then move up to go into the buying. You can actually sell, but at this moment of time, in terms of price, 84.17 is not an ideal selling price. So it's probably best, as you guys know, I talk a lot about psychological numbers. I've used it for entries and exit. So 84.18 or so at this moment of time is really close to 84.20. 0.20 is your psychological number. We've got 4 sets of psychological numbers. We've got tutorials on psychological numbers specifically. So I am gearing towards making a video specifically on that, just to help traders understand how you can actually use psychological numbers for entries and exits only. Okay, so 84.18. Now 84.18 or so, it's probably best for you if you want to sell, you sell 10 pips below the psychological number of 20. So 20 minus 10 is 10. So 84.10 would probably be a better price to sell. Let me indicate that with a horizontal rate line. Give me a second. Okay, rate line there. There we go. Okay. So here we have got, let me just, 84.10. Okay, so 84.10 would be a better price to sell as opposed to the others, as opposed to now or anything close. So 84.10, you could potentially sell at 84.10. And then we take that mother candle right there to the left, just as an indicator to tell us, how much more can we actually sell based on that selling power right there of a single mother candle. Now, that has been marked at the closing price based on that candle at 83.55. Now, 83.55 is very close to 83.50 psychological level. So if you want to exit, you need to exit 10 pips above 83.50. So what would that price be? The price would actually be at 83.60. So 83.60 for those who wants to TP, could TP at 83.60. There we go. So then we have got an approximate 50 pips right there. Okay, so you minus your broker's spreads and stuff like that. You do your calculation yourself, but that is the opportunity right there. So I might take this trade as well at for the Aud Jpy on the sell. But of course, I'm a trend trader. Usually, I would like to demonstrate whatever I have actually shown as well and recommend to you of trading on the downside first for now. So I would take that trade as well on the selling side, because it looks like it's got power. It looks like it is actually about to correct itself as well. Now, I could also use the stochastic in a very different way to actually indicate whether or not there is a reversal. Now, reversal meaning at the moment, the trend is biased to the upside, right? You've got higher highs, higher lows, and then it's above all the 3 lines as well. So on the 4-hour chart right now, we are looking at the bias on the upside. So if we find a divergence, that means there will be a reversal. So the reversal means that it would probably be going to the downside for now. Okay, so if I want to do that, I just go into indicators, and you want to it's categorized under oscillators, and you want to click onto stochastic oscillator. You don't need to change anything, just as it is on default. And you want to look at the indicator as well as the price. Okay, so we have got, let's look at the indicator itself. We've got this peak right here, and the current price is sort of on the same level. Okay, that yellow line. But then let's look at this peak indicates this peak here and the current price there, right? So it's slightly on the upper slope because the highest peak right there, not the current price, the highest peak. So you've got an upward slope and a horizontal slope. What that means is that you've got divergence. That means whatever you see, that slope that you've made there onto the candlestick chart that depicts the price is opposite to what you have drawn onto the stochastic. So that means there is divergence, not convergence. If you've got an upward slope here, and then, for example, you've got an upward slope here, that means it's a convergence. That means there's no reversal as yet. Okay, so that is just a bit of an indicator. It doesn't happen all the time, but it sort of tells me itself with the price action as well as this area right here that a reversal could potentially happen because it's reversed before. This is quite a significant fall of 200 plus pips at this level here. And now, as you can see, you've got a sort of a three type candle, like an arrow. You've got candle here, then you've got a candle in the middle here, and then now it is indicated to us with a bearish candle. So now what we do is we're just waiting for our sell trigger or selling trigger to take place at 84.10 and then 83.60. Now it depends on how you want to plan your SL. Basically, it's connected to your risk appetite as well. So you want to look at your average pip movement for AUD JPY is quite huge. So if you've got a potential of, let's say, 50 pips, you want to keep your SL at least at 100 pips. You don't want 50 pips and below. You can use your 1-to-1 ratio as well, but then we're talking about AUD JPY. So AUD JPY, you've got loads of carry traders participating in AUD JPY. So sometimes it does actually create a lot of liquidity as well as momentum, volatility, and stuff like that. So it can be quite a favorite pair for loads of Asian traders, especially who actually trade the AUD JPY. And it's in particular, it's very much a carry trade type pair for those who are buying the AUD. So imagine if it is registered in the minds of traders and investors that AUD JPY is bullish, then you've got a lot of carry traders would actually be on standby to want to actually trade on the buy of AUD JPY, because if you carry trade, you get paid extra from the exchange rate. So we'll talk a little bit more about carry trading as well, but it's usually combining one currency that has a very high interest rate with the one that has almost zero interest rate or negative interest rate. Like, for example, JPY is the lowest and Australia is the highest at the moment. So you've got that as a carry trade type pair. Okay, so this is basically it for AUD JPY. Does that answer your question, Sukunan? You're satisfied with that on your AUD JPY? Yeah, so you've got a bit of a sell opportunity right there. Okay, 84.10, your entry, 83.60, your take profit, and then your SL. You want to keep it at above 60 or so pips. Okay, but it depends very much on your lot sizing as well, very important, as well as your risk appetite. Okay, perfect. Okay, any other questions on JPY pairs? Any of you guys are trading the JPY pairs at this moment of time? Or any questions on your current trade? That's the most important thing. Okay, let me just share with you as well on some of the news that's been going on. As of market open today, we have seen some news on Bitcoin. We've got a bit of a Ponzi scheme scam that has gone on. So they are suing the, not suing, but they are imposing a fine on the mastermind himself, Benjamin something, I think his name. So that Bitcoin Ponzi scheme fine is 572 million. Okay, so we have not seen a much impact on the market on Bitcoin based on that, but that scammer have actually Ponzi'd quite a number of investors. I think about 1,000 investors with 2,000 coins. So the total scam was about 1 over billion. I think so. That's why he's been fined 572 million. Okay, so that was one of the big news in the market with regards to cryptocurrency. But then in terms of Asian market this morning, if I could remember it correctly, it was actually trading on the low side, especially with equities. So let me just check. Yes, of course, Alfred. We can take a look at Euro JPY. It's an interesting one to look at as well. So yeah, we can do that. Give me a second. AUD JPY on that one. Okay. Okay. Give me a second, guys. There you go. So we've got Euro JPY. This is on a daily chart. It looks like it's one of those pairs that would actually be bullish against JPY. JPY is really weak. This is quite a nice sort of trend as well on the daily chart. Let me just move on to the 1 hour chart, and we start off with the 1 hour chart. We can see that the lines are not very nice. It's not giving you a very clear indication of an uptrend. But then if we want to cross the highway again of the currency market, especially, we want to look to the right, we want to look to the left. Now, to the right, I can see that 129.79 or 129.80. It's trading exactly on the dot of the psychological number of 80 at this moment of time. Now, when we look to the right, we look at the price, and then we look at the price from a psychological number perspective. And then we look to the left, and we can see that we have got a peak right here that needs to be paid some attention to, because that was quite a significant drop there. We're talking about a 1 hour chart right now, and you want to draw the zone there. Okay, you want to draw your resistance zone based on the highest candle we can see, based on that cluster of candles right there, and then based on the wick. So once you've done that, then you know that, okay, you've got reasons of prices at the moment could potentially reverse. So it's not a good time for you to actually think of buying. You need to think of where it could reverse, because you've got two reasons. Number one, it's just so close right on the dot of the psychological number that may actually tell you that it might want to reverse very soon. And then this reason for reversal could be fueled by what has actually happened in the past. Right here, you've got that resistance there. Now, a third reason could also be whether or not you could actually spot any bearish long candles as well in the past. And the answer to that is yes, you've got one here, very long one. That's on a 1 hour chart, and that is a mother candle of about 40 pips, just the body. All right, and maybe if you look more, might actually find more. But then this is telling us that reversal could actually happen and could actually follow that most obvious mother candle right there and bring price down to 129.50 area, which is your psychological level. So there you go. You have got this area here to look at price coming down to 129.50, and there may be a potential of it to actually reverse now, come down and find a support. Okay, because if you've got a lot of buyers out there for the euro, then the buyers would like to buy it cheap or buy it at a cheaper level. So where could it actually be landing? That's the question. Where could it actually be landing as a support for you to then buy early and find that good quality price of buying and buy? So not to buy now, to enter the market for the buy. You need to leave the market to reverse a little bit, to respect the market's decision of what it wants to do for now, which is most likely to reverse first before it wants to take you onto a bigger ride onto the buy for Euro JPY. So not just yet, and these are the areas for you to look at. Let me just, okay. You've got an area right there, which is the bearish candle there. But then if you look further to the left, you've got a potential of price actually riding along that single bearish candle a little bit lower to the 129.23 area. This is the worst case scenario of the reversal. Okay, so hopefully you've not bought the Euro JPY yet, because it's probably best for you to buy later and buy it cheaper. So perhaps it has a potential to drop to the 129.20 psychological level. So there is an approximate drop of about 50 plus pips potentially before it manages to want to go up. And this is actually a good level for it to find support, mainly because this is where the concentration of support, resistance and support are, but together with that, you've got the 50 and 100 exponential moving averages. They are entangled and they are creating a sort of support area there exactly on the dot of 129.24 area. So 129.24, very close to 129.20 psychological level. So I want to draw that as well. Let me see, 129.20. Okay, so you've got 129.20. Give me a second. 129.20 right there. Okay, so you've got it there. This is it. So you've got that. Now, what happens is that we have got a zone, a no trade zone. Okay, a no trade zone. So that means that if you want to participate in the market's trend, if it's bullish to actually buy, it's probably best 129.93 and above, or better still, 130.10. So this is for those who are wanting to be safer and better, to be riding the market even more. And if you wait for that moment, 130.10 and above, that would probably be better positioned to actually see that the market has marinated more buying pressure, and then it would actually be avoiding all the risk of other reversals at that time. So your best support area or market as blue, or entry point for buy, would be at 130.10, not 130.00 round numbers. I know there's a lot of traders out there. They've actually been recommending other traders to actually, buy at round numbers and all that kind of thing. It's not about the round numbers. It's about concentration of investors, traders, institutional ones who have actually registered certain round numbers, especially the 00, 20, 80, and 50, to actually be of significant, and they usually have got their plans and their strategy to actually trade with round numbers. But it doesn't mean that you need to trade with the round numbers too. It's probably best for you to trade above the round numbers a little bit for the upward type trend, and then to trade under the psychological number for a downward type trend or selling opportunities. Okay, so now we've got this area here that I will mark as keep aware and be careful type area right here, no trading kind of zone. NTZ, okay, no trading zone at this moment of time, because we don't know what it's doing at this moment, whether it would like to go up and then come down and then make a zigzag and it consolidate all the way through. But we don't need to bother about that. If you want to actually trade the Euro JPY and its bias to the upside, it's probably best for you to wait till price, penetrates or go through the 130.00 psychological number, and then you can take that trade and ride along it strongly. And also, if you look at the ADX, that blue line is under the level 25, so it's telling you that the current trend is actually quite weak because it's under the 25 level. So that does actually give me an indication that it's not time just yet to trade onto the Euro JPY. And the good thing as well is that if you start trading for the buy for Euro JPY, you can do a pending order, of course. You do a pending order at 130.10. The good news is that at that level, if you look to the left, you can see that you may be supported by a bullish mother candle right there that may push the price up. So then with that area, we have got that mother candle right there is worth about 30 pips or so, okay, 20 pips. So it's reasonable, but I don't see a very big burst of an uptrend by any mother candles at this area. Okay, we've got one there, as I've mentioned. Let's say we've got one there, yeah. But then very close to it, you have got your resistance again here, right? So it's not very exciting. The journey of buying the Euro JPY is not that exciting. Also because you guys need to understand, we have got loads of challenges in terms of the Eurozone, fundamentally with the news of the COVID situation, it's not looking good at all. The major economies are suffering at the moment with structuring all this COVID situation and various other things. We are talking about a third lockdown, a third wave of the COVID as well in main economies in Europe, especially in Germany, in Italy, and France. So these are the three, economic powerhouse for the Eurozone. So you need to be careful with that, and hence the reason I think if I match that side of it with what's going on with the technical side of it, I just want to still be careful and trade cautiously as well because of all that. Because we are looking at the biasness of the upside move, but then it's not looking too confident on the fundamental side of it. Okay, so we want to be really careful with that. We see that the daily chart may look a little bit better, but from the way the three lines, the three exponential moving average is moving on Euro JPY, is not so vertical. The more, not vertical, sorry, the more slopey it is to the upside, the better and more strength it is. And you can see ADX on the daily chart does not look that good. It's actually plunged downwards, and then you've got it just above resting at the 25 level. It's not a good sign. So I think for the short term, yes, you can actually buy, but don't get too excited with the buying. Your buy zone is here, okay? 13010, 13040, you can exit, or 130.35, you can exit. If you exit there at 13038, and then you entered or your entries at 13010, then you're looking at about 28 pips or so, okay? So that's what the market, I feel, could actually give you for the Euro JPY at this moment of time for the shortest term. For the longer term, we don't know that yet. It's not that clear for the longer term in terms of Euro pairs in general, because there's a lot of mess going on in the Eurozone at this moment of time. Okay, guys. All right, I hope that have actually helped for today for you guys, traders. Any other pairs that you guys would like to look at before we get going? Because this is just your Wednesday's midweek report or session. And what I will do is make individual videos as I get along later on specific pairs, so that you get specific pairs, specific strategies drawn on that pair. Okay, let's look at questions. Yes, of course, Lucas. Euro USD, yes, I actually forgotten about Euro USD. Let's look at Euro USD. Now, Euro USD, I think if you compare between Euro USD and Euro JPY earlier on, Euro JPY buys to the upside and various other things, but then a lot of challenges, right? But then if you look at Euro USD, it's a little bit clearer to the downside in terms of the trend. Okay, it's a little bit better to trade on the Euro USD if you want to compare that with trading the Euro JPY on a buy. So even to trade Euro JPY on a sell or a buy, they're a little bit fishy there, okay? Because I don't actually see the clarity of trend as much, mainly because of the combination of pair. It's not a good time for really combining Euro and JPY. It's a good time to combine Euro and USD in a way, mainly because of what's going on fundamentally in both countries, in the US as well as the Eurozone. We can see that a lot of bearishness in the Euro and a lot of positivity expected as well, and volatility and volume for the USD. Okay, so here, let's clear out all these lines that I have. Number one, you want to simply have the three lines, your 50, 100, and 200 exponential moving averages. Okay, and you want to start off with the 1 hour chart. And as you start off with the 1 hour chart, what you want to look at is whether or not candles are under all the three lines. They look like they're actually very much biased to the downside, right? So you've got all these movement downside quite far apart. The three lines are not entangled. The three lines are open up like that, which is really good. And then they're flowing like a river to the downside. And that means that it's biased to the downside, bearish. Okay. Now, crossing into the currency highway, we need to look right and left. Number one, we look at the right side of the price, right side, which is the price. It's trading at 1.1724. Now, if 1.1724 falls a little bit lower, it will reach the 1.1720 psychological number as well as the 1.1700 psychological number. So it's good to draw these two lines under the current price. And then as it moves higher, it would reach the 1.1750 psychological number. So what I'll do firstly is lay out all the psychological levels first. Okay, so 1.1720 is your closest one. Okay, 1.1720. There you go. So I got it right there, 1.1720. Very good. And then the next one, 1.1700 psychological number. Okay, so let's do that. Okay, lay all this out first, and then you lay one for the upper resistance level based on psychological number, and above the price 1750. Okay, so 1750. There you go. So here we can then know, we can take the middle line out. We can then say that the current price for Euro USD, now Euro USD, yes, it's biased to the downside in terms of trend. We compare that with a 4-hour, very nice downtrend. We compare that to the daily. Daily starts to weaken a bit. So let's say we are looking at a downtrend up to the 4-hour chart. Okay. So we've got some room to sell, but is it time for us to sell right now? Maybe not, mainly because we need to wait for the price at the moment to break out from the zone. We've got this no trading zone at the moment. Mainly it's made up of the psychological levels of 1750 right down to the 1700. So that 50 pips non-trading zone right there. Okay, here. Now you want to trade at 1.1690 and below. Okay, so if you want to enter, never enter at 1700, anything close 1700, at least 10 pips under. So 1.1690 would probably be a better price to sell. You can do a pending order at 1.1690. For those who wants to be a little bit safer, more conservative, you can actually start selling at do a pending order at 1.1670, which is 10 pips under the 80 psychological number. So you've got two options of selling or pending order of selling the Euro USD at 1.1690 or 1.1670. Okay, that's clear. So that is your decisions on pending order in terms of entry price, sell entry price, which is better. Okay, which are better prices to enter. Not now. Now, as you can see, the reason of not now also is proven by what's happening on the daily chart. On the 4-hour chart, you can see that it came down here before the 1700 area, right? It reversed. Now you've got a bullish candle. So this is to save you from getting confused, getting into the trade too early, not understanding the trend properly. The trend is clear. Up to 4-hour, you've got a downtrend. You can sell if you want to. It's probably for those trend trader, you can actually want to sell, start selling, as I've mentioned, under the 1700. Okay. So then what we can then do is to make sure that when we decide, you can even decide now to actually do a pending order at 1.1690 or 1.1670, right? Now, if you decide to do that, also you want to make sure that under this area here, could you see a lot of selling power in the past? Okay, under this red line. Okay, have we got selling power? Now, selling power meaning from a bearish candle's perspective. I don't see much. That is a worry. I see a little bit. I see one bearish candle right there under the 1700 area, and that is to this level here, and I will make that as a blue, meaning support area. So you need to exit before that area. Okay, so that is at 1.1680 or 79 area, exactly on a psychological level. So it tells me that there is a possibility upon breakout of Euro USD to fall a little bit, but you need to exit at 1.1690. So no, it's not good. It's not good to actually sell even under there because you don't have power. Okay, we don't have any power, any fuel of a mother candle. We need a mother candle that is long enough to hint to us that after that price under 1700, there has been loads of interest. There has been some interest, but then you've got support, not good. Okay, we can actually take this support as your take profit, yes, but then traders always make that mistake whereby they make it in their mind the story that they want to sell under here and they look for the next support. Now, the next support is for the support of the markets, not for you as a retail. Why? Because I have not seen a single bearish candle that could actually drive price in the past or have driven price in the past. So it's very risky. What if I go onto the daily chart? Can I see something else? Could I have any bearish? You see, I don't actually see single bearish candle that is about 50 plus pips or 100 pips, whatever, long ones that have actually broken out from that zone at 1700. Maybe there's one here that is not too bad. We've got one. The longest one here actually ended at this area right here. And we've got some that short lived and ended here. Okay, so we have got some, but maximum, in my opinion, if it breaks up from 1700, start to fall, maybe about it could actually minimum fall to about 30 pips or so, small. But if you've got negative news to fuel it, it could actually fall down to about 120 pips or so, 110 to 130 pips or so. The potential is there, but we need to make sure that we plan it well. So we've got one at 1660, let's say. Okay, so let me plan that for you guys. 1.1660 as your take profit for the shortest term. Let's say TP1. Okay, this is if you find so you've got 1690. 1.1690 is your entry ones sell, and then you can take profit 30 pips or so, 1.1660. Try to be cautious. Okay, so you've got your first trade signal right there. I'll probably do a pending order with that as well. So 1.1690, you do your pending sell order, take profit 1.1660. Okay, so that's your first TP. Now, if prices falls even more, and then you are looking at prices in a second, 1640. If after that first successful pips of selling, then you can open a second order or do your pending second order at 1.1640. Okay, let me put that as a red one there, selling. Okay. 1640 is your next second pending order for the sell, and then you'll take profit 1.1565. Okay. Okay, that's clear. Right, so the first one, you've got 30 pips. Second one, potential wise, 70, a little bit bigger, 70 to 75 pips potential on the second one. So there you go. So let's monitor this. You can do a pending order from now on, and let's wait and see what the market gives. Now we're waiting for momentum. Okay, we're waiting for the London Open. London Open entering now, and then we want to see how that actually does it with the US Open as well, especially with the speech. The speech of Biden is very, very important. This morning, we have seen some positive more than expected. It exceeded expectation for Chinese data. So Chinese data usually does actually influence Australian currencies and also New Zealand. Okay, so because it's got a lot of positivity there, hence the reason you didn't see AUD USD drop so much. But then we see that AUD USD has got a head and shoulder pattern. Euro USD has got a sharp pattern that has already gone on for a long time, for 2 weeks or so when we have talked about it. So all these ones that has specific pattern, I'm going to do a specific video for it. Okay, so to focus on that, on specific pairs with specific pattern. Okay, guys, any other questions? You guys are okay? So far, all good? If no questions, we'll end the session for today, and we'll take it again on Friday. So we have from Bretton Academy or Bretton Financial Trading Academy, we organize minimum 3 webinars for the week, but I can see that it needs to be extended to various time frames, various timings as well for each one. So we've got Mondays, Wednesdays, and Fridays. Okay, so I think I may have to end up doing at least 3 times for the different time zones in Africa. We've also got a group coming from Canada as well as the Asian traders. So it looks like I may probably from next week onwards, as the group comes in more live, then I will do 3 times at least on a Monday, Wednesdays, and Friday. At least 3 time zones to be able to cater to the market's needs in terms of time differences. Okay, so all right, Lucas. Lucas, good to see you. Pass the words around again, and we would like to welcome the rest of the traders in Kuching, especially to actually join us. Okay, and yeah, we're going to be doing this consistently now from now onwards with Mondays, Wednesdays, and Fridays. So I think I'll be able to adjust the timing even better by having 3 webinars a day at least to cover the different time zones. Okay, all right, good. All right. Okay, Mr. Kunan may be looking forward to going to Kuching again, but because of the COVID situation at this moment of time, we never know. Hopefully, it all ends soon enough for us to travel safely to different parts again to meet all our fellow traders. Okay, so because we've got some messages today, especially coincidentally from Miri as well, also in Bangkok and in India as well. So we've got bigger groups forming in India as well. I've got a new group forming there in Gujarat area, I think, Gujarat and Delhi, and also Lucknow, I think, if I'm not mistaken. So we've got a big group forming up there, and it's quite interesting because I like to gather them up and join you guys and have you guys all meet up as well with other fellow traders, because it's interesting to look at how they are trading as well and what are the factors, even the time zones and the they actually trade in different time zones. They love to trade the Australian Open, and they prefer Australian pairs as well. So it's nice to see all these differences in how they trade, what they pick to trade as well. But most of them are manual traders as well. So yeah, very soon you guys will be getting to meet more and more traders from around the world. So I'm gathering them all up into different sessions and make sure that now the only challenges are the time zones. So hence the reason I've pre-recorded all my webinars and send it to them. But we are organizing now a big group, a very large group in Philippines and India, as I've mentioned, and various other areas. So hence the reason I want to merge them all up so that you guys can actually meet them. They can actually meet you guys as well from different parts of the world. Traders could actually communicate and network amongst yourselves so you guys can learn from each other. That's very important, and create a good circle of traders amongst you and succeed together. That's the most important thing. Okay, guys, I need to go. I need to leave for the next webinar, next session with a group in Mongolia, I think, if I'm not mistaken. My schedule says is Mongolia. So I've got a Mongolian group trading, love to trade gold. They also trade physical gold. So yeah, I would love for them to also join you guys and tell you how they actually ride horses to go to a internet cafe and trade at the internet cafe. That's very interesting, right? Okay, guys. So with that, wishing you guys a happy pipping week and happy pipping day, and we will see you guys on Friday's Bretton Academy webinar. Okay, guys. Now take care, and we'll see you guys soon. Bye, bye, guys.